Um, Welcome to the IIUSA EB5 Investor Market webinar series. Today we'll be discussing the Brazilian and other Latin American investor markets. My name is Mackenzie Penton. I'm the Director of Events and Business Development for IIUSA, or Invest in the USA. IIUSA is the national and truly international not-for-profit membership association for the EB5 regional center industry. We represent around 300 organizations, both in the United States and around the world, in advocacy, education, government affairs, and research. Today, obviously, we're focusing on the educational component, and you'll be hearing from some of our members who have been kind enough to step up and support this important event to help investors throughout Brazil and Latin America learn more about the EB5 Regional Center program. Before we go ahead and get started with the discussion, I want to give Diego Petanazzi an opportunity to introduce both himself as well as the World Trade Center Sao Paulo Business Club, who have been kind enough to partner with IIUSA for this event today.
Thank you, everyone. First of all, I want to thank you and congratulate the IIUSA initiatives through Mackenzie and our team, holding events and taking opportunities into the world. For us, is a great opportunity to share to Brazilian and Latin American investors and C-level this opportunity here. We at the WTC São Paulo Business Club, also present in other cities in Brazil, have been strategic for investors and C-level, bringing content and business opportunities for everyone. In 2020, we held more than 400 business meetings, uniting more than maybe 12,000 leaders here in Brazil and Latin America, but also in 18 countries in the world. The result was the generation of more than $5 million here to our clients in Brazil and Latin America. So I appreciate the time of all the connecting Brazilian and Latin American leaders, especially the other WTCs below Mexico. I appreciate the opportunities and the time, Mackenzie, and await our opportunities and information here with you and our friends here. Thank you again.
Great, thank you, Diego, and your support has truly been critical to the success of this event as well as our past engagements in Brazil. I'm very happy to report that we had over 250 Brazilian registrants for this event and over 330 registrants total from 13 countries. But bulk of that effort was certainly carried out on behalf of or by the WTC. So thank you again for that, and looking forward to future collaborations as well. Quickly, before we go ahead and get started, I did want to go through this quick disclaimer. This webinar is intended for educational purposes only. It does not constitute legal advice in any way, and you should always consult with your own legal counsel with questions or concerns on the topic. However, with that being said, all of the information that is presented today has been deemed to be accurate and up to date as of the date of the presentation. Please also note that the chat function has been, rather, it says enabled there, but it's been disabled for this event. Rather, we have a Q&A function at the bottom of your screen. For all participants are welcome to submit questions using that function. Our panelists will periodically pause in their presentation to answer questions if they're relevant to the topic at hand. If not, both of our panels have dedicated time at the end at which they'll be addressing questions. So the question becomes, IIUSA, we are the, as noted, the nonprofit membership association, the educational group for the industry. The participants on today's call are our members, the leaders in the space. But why are we here talking about Brazil and Latin America? The answer, as you'll see here on this chart, is Pretty simple, in fact. Brazil is one of the largest investor markets in the world for a multitude of different industries, but certainly for the EB5 industry as well. In fact, you'll see there between 2008 and 2018, there were 807 investors that completed the EB5 process from Brazil. As you'll note, 2018 is where our data ends, and then that's in fact where the data ends from USCIS as well, from data provided to us. For those who are interested in seeing a little bit more on this data analytics side of things, we do have our EB5 investor market portal, which will highlight Brazil and all the other investor markets around the world in pretty detailed way. In addition to Brazil, we also have Mexico and Venezuela, which are two of some of the larger investor markets in the region as well. You'll see 646 investors from Mexico between 2008 and 2018, and 649 for Venezuela during that same time period. We've also seen increasing interest from some of the other markets in Latin America, including Chile, Argentina, Bolivia, and Peru. So it's certainly a lucrative market for the industry, and I'm glad again to see quite a good deal of participants from all over the region on today's discussion. So on behalf of IIUSA, thank you again for everyone who's joining today. That's probably enough for me. I want to go ahead and turn it over to the actual experts in the industry for our first panel. And quickly to note, this is panel 1 of 2, so there will be a second panel to immediately follow this. So please do ensure you stay online for both. But with that, I'm going to turn things over to Kurt Royce. Kurt is the founder of EB5 Marketplace and will be moderating today's discussion. Kurt?
Thanks, Mackenzie. So I'll start by introducing, or at least allowing each of our panelists to introduce themselves. Fernando Guerrera is the Director of Business Development for Golden Gate Global. How are you, Fernando?
Hi, Kurt. Hi, everyone. Good afternoon. So as Kurt said, my name is Fernando Guerrero. I'm the Director of Business Development for Latin America for Golden Gate Global. We are a regional center and investment firm based in San Francisco, California, with projects mostly on the West Coast of the United States. Golden Gate Global has $1 billion under management. And this year, we're going to celebrate 10 years in the EB5 space. We are very proud of that. And our managing director, Aaron Chikedaki, is part of the IIUSA board of directors. So we are very attuned with what's going on in the industry. And in terms of language capabilities, we talk Portuguese, we talk Spanish, and several other languages. And I'm happy to be here and that there are so many people from Latin America today that are interested in learning more about EB5.
Thank you, Fernando. Our next guest is Matt Hogan. Matt's the Vice President of Project Development at CMB Regional Centers. Hi, Matt.
Hi, Kurt. Thanks, Kurt. And thank you to everyone who's joined us here today. As Kurt mentioned, my name is Matt Hogan. I'm Vice President of Project Development for CMB Regional Centers. CMB is one of the largest and longest active regional centers in the industry today. We've worked with over 5,800 clients from over 100 different countries, and of course, many clients from Brazil and Latin America. I think over the years, Latin America and certainly Brazil have been staple markets to CMB. We spent a lot of time working with investors from those regions, and we continue to look forward to be able to provide opportunities for them for many years to come.
Thank you, Matt. Our next guest is Sebastian Stube. Sebastian is the CEO of Pine State Regional Center. Hi, Sebastian. Oh, you're on mute.
Mute button every time. Thanks, Kurt.
Sure.
And thank you to Mackenzie and to Lee and to everybody else at IIUSA and to Diego for having us. It's a pleasure to be here. As Kurt said, I'm the CEO of Pine State Regional Center. We are part of one of the oldest economic development corporations in America. We were founded in the 1950s by the Rockefeller family, and we operate effectively as a nonprofit. Our mission is to support job creating projects. So we've done hundreds of job creating projects, predominantly in the southern part of the United States. We're currently working on a second phase of a very large private EB5 project called Big River Steel, which is a manufacturing facility, and I'm sure we'll talk a little bit more about that later on.
Great. Thanks, Sebastian. Next is Alvin Wong, Alvin COO of the Manhattan Regional Center. Hi, Alvin.
Hi, Kurt. Hi, everybody. Great to be here and to be on this distinguished panel with everybody. As Kurt mentioned, I'm with Manhattan Regional Center, where since January of 2011, we have been offering attractive real estate investment opportunities in New York City to EB5 investors across the world. Under the leadership of our managing director, David Marks, who himself is an attorney and real estate developer, MRC and its affiliated companies have successfully completed large-scale projects from inception through operation. Our key personnel each have over 30 years of experience in the different aspects of real estate development, and we have successfully helped hundreds of investor families to achieve both their EB5 immigration goals and receive a return of their investment capital. At MRC, we are truly a team that you can trust, and we're excited to be here today.
Thank you, Alvin. And my name's Kurt Royce. I'm founder of EB5 Marketplace, an online platform that makes it easy to choose an investment. Over the past 8 years, we've performed due diligence on more than 200 EB5 investments. We highlight the investment terms. We provide a strengths and risks analysis and a rating for the likelihood of success. And we define success as getting your permanent green card and the timely return of your capital. Currently, we have identified 14 investments that we consider suitable for investors at the $900,000 level. Our online platform makes it easy to compare different investment options, and there's no cost to investors to use the platform. We work closely with intermediaries and finders around the world who want an EB5 solution that they can count on for their clients. And we also work directly with investors who come to eb5marketplace.com. So the basics of EB5. I'm going to go through a couple of the basics, and then I'll turn to some of the panelists to help out. The investment amount. So the investment amount is 1.8 million by regulation. But if you invest it in a targeted employment area, so you can reduce that investment amount to 900,000. The job creation requirements require that the investment that you make, it create at least 10 jobs. The investment timeline is basically it includes a number of steps, some of which you have to estimate. And so the first step, which I consider to be the hardest step to estimate, is you'll file your EB5 application, which is called a Form I-526. And that form can take as much as 2 years, and I think probably averaging more like a year to a year and a half right now to get approved. Now, once you're approved, if you're in the US, you file to change your status. And if you're not in the US, then you'll have an interview at a consular office. And at that time, once the interview is over, assuming it goes successfully, you'll get a green card for yourself and any family members that are part of your petition. You have an option to invest in direct and regional center investments. Direct investments are where you have to take more of an active role and you are responsible to create the 10 jobs. The regional center model is more of a pooled investment. All of our panelists today represent regional centers. And I believe the number is something like 96% of investments in EB5 are made in regional centers. There's a number of reasons for that, and we can talk about that if we have time. And then the impact of COVID. So, Sebastian, can I start with you? What do you see as some of the impacts we've experienced from the COVID experience?
Well, look, I think when an investor is making up their mind as to what project to invest in or whether to do EB5 at all, I think, at the end of the day, safety is the word that I think all of the colleagues on the panel here would agree is what people should focus on first and foremost. This is obviously not an investment where the return on capital is particularly exciting. What the return is you're looking for is a smooth process to get the green card and then to get your money back. So choosing a project that is healthy and has the likelihood of being healthy by the time you're ready to get your money back, that's really what you should focus on. I think COVID has had some pretty distinct negative impacts on a lot of projects, just like it has on the economy as a whole. But I would actually argue that investors today are in a better position than they were in 2 or 3 years ago. And part of the reason is simply that a lot of lower quality projects have disappeared. They didn't make it. Regional centers that were not properly staffed or properly capitalized have closed. And so I think what you're left with today is a much stronger, smaller, but much stronger group of regional center and a much stronger group of projects. Now, obviously, there are things you should be focused on and worried about. Financing still is an issue. It's not that easy to get financing for projects. So obviously looking at projects that are already completely financed or close to completely financed will add some safety to it. Just generally looking at projects that are far along in terms of construction, because again, COVID has obviously created work stoppages, slowdowns, supply chain issues. So looking at projects that are far along can give you additional comfort and safety.
Right. Another thing that happened about 1.5 years ago was we saw an investment amount being increased. And before we move forward, Alvin, there was a question that just came in and asked us to repeat the investment amounts. Could you just tell us how are the investment amounts determined?
So that is determined by the targeted employment area, which is, so the standard is $1.8 million. But if you invest in a project that is TEA qualified, then you can invest at the $900,000 investment level.
And can you define what a TEA is?
So TEA is determined by the unemployment level in a particular census tract. And if the census tract is 150% of the national unemployment rate, then it qualifies as a TEA tract. And right now it is changed in that it used to be you could link TEA tracts and then link it so that as long as you're touching a census tract that is touching a TEA, then your project would qualify. Right now it is, you have to be immediately touching and it is no longer linking.
That's right. And that had a significant impact.
Kurt, if I may, I would just add, given that this affects us, unemployment is just one of the TEA qualifiers. Geographic location can also be. So in the case of a project that is located in what's called a rural area that is defined as a certain distance from a metropolitan area, also qualifies as a targeted employment area without consideration to unemployment.
Yeah, thank you, Sebastian. And it's an important point because as you're looking at an investment, if the employment changes in that area, it could negatively impact whether it's still in a TEA or not. So you want to make sure that you check out the statistics before you file. But if you invest in a rural area, you are protected. There is no need to prove the employment numbers. So there is that benefit to having a little more certainty in a rural market. Alvin, you also mentioned that the census tract issue, that change, I think, had a very big impact on the industry. And Matt, you are probably one of the most experienced people in the industry. So can you walk us through a little bit about what happened on November, I think it was 21st, 2019, with the census tract that really eliminated a lot of the regional center projects that we had seen?
Yeah, it's a great question. So back in 2019, regulations were finally made effective that did two things. One, they raised those investment amounts that Alvin mentioned earlier, and then tightened the criteria. I think Alvin did touch on that as well. And in tightening that criteria, it eliminated a lot of the projects in regions like New York City and some of these larger metropolitan areas that were able to aggregate huge numbers of census tracts to make projects qualify that really didn't fit the original intent of Congress. I think when Congress implemented the EB-5 program, their goal was to try and drive job creation into regions that truly needed economic stimulation. So high unemployment areas and rural areas that are traditionally underserved. And so, as a company, CMB, we've always been focused on those areas. Our acronym stands for Closed Military Bases. We actually originally got our start doing infrastructure projects to reintegrate BRAC closed military bases in California to put in new roads, new sewer systems, new utilities, and create platforms for what are now large commerce developments, large business parks in Southern California and in Northern California. So tightening those TEAs was a huge step that the USCIS took to create a program that fit the intentions of Congress. And I think that, in the long run, it'll help the country and it'll help focus this program on areas that truly need it.
I totally agree with you, Matt. In fact, we see that in the new bill. So there's a new bill called the Reform and Integrity Act of 2021 that is talking specifically about EB5. And a lot of the legislative changes in that bill are supporting more rural and more high unemployment areas and really decreasing the value of being in an urban area or maybe disincentivizing investments in urban areas. So whether that's a good thing or bad thing, I think that depends on where your project's at. I will tell the audience that because there has been such a slowdown in petitions since the changes in 2019, some of the projects that are in the market today have progressed substantially. And there are some excellent projects available in those high unemployment and rural areas. So while it may seem that you're safer in an urban area, I will tell you from experience that the opportunity today may be the best opportunity I've ever seen in EB5 to identify a project that you're going to feel comfortable with. So Mackenzie, if we go to the next slide. So the opportunities ahead, new legislation supports investors. Fernando, why don't you tell me what in this new legislation strikes you as being very supportive of investors or very supportive of the program? Where do you think the meat of this new legislation is?
Yeah, I think there are several points there, but I think it adds more certainty to the program because before the program was always attached to a spending bill. So every budget year, the program had to be renewed. And now with this new bill, it's trying to detach the EB5 program from the approval of the spending bill. So that will hopefully bring more stability and more predictability to the market. And we can focus on improving our regional center governance and all of that, and not having to do so much concentrating on efforts in Washington, D.C. to get the renewal of the program every year.
Yeah, I think that is the highlight. And Matt, let me turn to you now. So stability obviously is a big thing. And I think another aspect of stability that we see in this bill is we're now codifying a lot of language that had come out in policy decisions and really not legislative items. And it seems like some of those items now are in the language of the bill, so we can rely on it much more with certainty. Is there anything in this bill that strikes you as being positive for investors and positive for the program?
Yeah, well, I mean, not only is it the long-term extension, you're going to have 5 years of stability, but they're also putting things in place to normalize processing of petitions. And I think that is one of the biggest things that's going to help investors. They're requiring that regional centers file 924 petitions. So an exemplar petition, it doesn't have to be approved before a fundraise starts. But if you file that petition and the USCIS adjudicates and approves that petition, they are codifying the concept of deference, meaning that they'll hold that approval and any subsequent petitions filed under that new commercial enterprise will be approved from a project standpoint. We'll still look at the individual investors' petition to determine whether or not they qualify as an individual, but they won't adjudicate or re-adjudicate the project. And in addition to that, they're putting in measures for USCIS to study and determine what the fees should be that will allow them to staff appropriately to adjudicate petitions within certain timeframes. Kurt, a second ago, you mentioned things that will go into this Grassley-Leahy bill that will help further solidify the intentions of Congress, which is to push investment into the high unemployment and rural areas. And one of the benefits that you're going to have for investing into one of those areas is that processing times could be cut in half. An investment outside of one of those areas, they're hoping they'll standardize that processing time to about 240 days. They'll cut that in half to about 120 days, or their goal, I should say, will be to cut that in half to 120 days if you invest into a rural or high unemployment area. So there are things like that in the bill that I think will really help investors. It'll make the program very attractive to not only investors that are looking to file now, but people who have been standing there waiting in the program already with petitions on file, waiting for adjudications to take place.
Thanks, Matt. And I want to just reinforce what Matt just said, because it's so important. The USCIS has been tasked to charge enough money to the regional centers in order to ensure that the average processing of your I-526, which is now between a year and 2 years, and it can fall anywhere in between there, and there's no rhyme or reason sometimes, we're going to see processing times that have been determined to be appropriate at 8 months if you're investing 1.8 million, and 4 months if you're investing 900,000. And all of the panelists today are involved in projects at 900,000. So that is really exciting to me, because I think if you can ensure, and then add the other thing that Matt said, which is they're requiring regional centers to get approval on their project before an investor invests. So now you've got the confidence that the investment is going to be accepted, and you've got the confidence that the processing time is probably going to, they're talking about averaging, by the way, averaging 8 months or averaging 4 months. So it really feels like this program is going to be a much more reliable program for investors. Sebastian, anything you want to add to this discussion about legislation?
No, I think you and Matt touched on all the highlights. I think, as I said earlier, when you're thinking about safety, you are already in a better place today than you were a few years ago in terms of the weeding out of lower quality regional centers. I think this legislation is just going to further move us in that direction. You're going to have at the end regional centers that are auditing themselves, who are being, faced with a lot more oversight, who need to be capitalized in a much more robust manner, who need to have a compliance department, and that's certainly something that most of the people on this panel are already doing. And so I think, again, there'll be a smaller group, but it'll be a much higher quality group. So I think investors are going to be safer. The other thing I would add to something that was said earlier, just to kind of be very clear, you, Kurt, mentioned, this notion of direct investing versus investing via a regional center. For those listeners who aren't entirely certain what that means, direct investing is obviously an active role. It means you have a lot of responsibility. The nice thing about a regional center investment is that it's entirely passive. You have to have no involvement. So when there's talk of responsibility for job creation, it just means you need to choose a project that will, in fact, create enough jobs. But it's not on you. You're not taking an active role. And that is the beauty of the regional center program. The price, by the way, $900,000, while it was a big step up from the previous 500, I would urge everyone to keep in mind that this is really still much cheaper than a lot of the other desirable programs, whether you're talking about some of the Canadian provincial programs or programs like UK, Singapore, other places. It's simply still the most attractive price-wise, most attractive program. And given that it's passive, if you choose the regional center path, I think you're in good hands.
Yes, and Sebastian brought up a point that I just want to reiterate as well. The new legislation is going to require a lot more responsibility on regional centers to follow the rules, to certify that they have followed rules. In some cases, you can eliminate all of that if you have a project like Sebastian does, which has audited financials. So because of the structure of their business, they have already audited financials every year. So, that's a kind of a project that will not require the details that this new bill is requiring of regional centers, but it really is providing best practices requirements on regional centers that we've only seen from the best regional centers. So Alvin, is there anything else we can add to this, or should we move on?
I was just going to point out on the transparency point, the bill actually does require now the active participation of fund administrators, which is very important because it adds to the protection of the investors, because the fund administrators will monitor, track, verify, and approve fund transfers, which is something that is, I guess, a bit of a negative connotation in our industry, because people seem to think that, oh, once the money goes in, I don't know what's going to happen. Well, these fund administrators are there to protect you, the investor, and having them involved is so critical because it makes you feel safe with your investment.
Terrific point, Alvin. The requirements of a fund administrator just add to not only the transparency, but the security, I think, is becoming inherent in this program, where it's much more of a normalized investment program than it has been in the past. And then the next point we had here was the Biden administration. You can see that Joe Biden believes in economic stimulus for the United States. There's never been anything comparable to the amount of money that they're putting into getting the U.S. restarted. He's put Alejandro Mayorkas in charge of the Department of Homeland Security, who oversees this program. And Mr. Mayorkas was in charge of EB-5 at one time, and actually was one of the most, I think, progressive leaders at USCIS of this program that we've ever seen. So a lot of good opportunities ahead. And, you know, a shout out to IIUSA. They've done a great job in getting this legislation organized and in a position that I think we're likely to see it pass soon. Mackenzie, if you could move to the next slide. Okay, so the Brazil market. We saw the numbers in 2016 and 2018, Brazil being a very promising market. But I think that with COVID and with the increased investment amount, we've certainly seen a big decline out of Brazil. You know, you've got the currency exchange rates moving against Brazilians. You've got uncertainty in travel and COVID. But Fernando, do you believe that Brazil is a market that is going to be drawn to EB-5?
Yes, Kurt. We've seen, you know, the numbers, they fluctuate for every country. It goes up and down, but Brazil, along with Venezuela, Mexico, Argentina, and Colombia, and some other countries in Latin America, over a long period of time, we've seen steady increases in the number of people that are interested in EB-5. And the types of families vary a lot. So we've seen people that is a typical family of one investor and the spouse, and then kids that they want to move to the US before the kids go to high school or before the kids go to college. So they're already in the US when the kids are graduating and ready to get a job, so they don't have to worry about quotas of H-1Bs or any other visa that is much less predictable, right, than EB-5. And we've seen people that are interested in entrepreneurship. And because we're a regional center in California, a lot of people look for us for opinion on the market in California, the projects in California. And they always ask, do I have to live in the city where the project is? And the answer is no. So you can invest in a project in California, and you can live in Texas, and you can live in Miami. So that doesn't really matter. So the things that you mentioned that it's really a problem for some Latin American countries, and especially for Brazil right now, is the currency. So I looked up from 2 years ago exactly, the dollar was at 3.8 reais per dollar, and now today it's at 5.7. So there was a huge jump there in 2 years. So that makes it a little harder for many people that want to move to the US to do an EB-5, but there's still the high net worth individuals and families that are still very interested, and they will move no matter what. So a lot of people love the American culture. They really look forward to having their kids in a US school, and they already have connections leaving the US. So they will make an effort to find the best regional center, find the best project, and the best attorney to get their project started.
Thank you, Fernando. You know, Matt, let me pick up on a point that Fernando made. You don't need to invest where you plan to live. And I think that's a really important point. There are projects in Florida, and we see Latin Americans often want to move to Florida. But that doesn't mean that you need to invest in Florida. In fact, I think by limiting yourself to a region like that, it really restricts your ability to get what might be the best project for yourself.
Yeah, that's right, Kurt. You know, we're unique. We're not a developer. We are and I guess we're not entirely unique in this industry. There's a lot of regional centers like us. We're not a real estate developer. We go out and we try and find the best possible EB5 projects for people looking to immigrate to the United States. And so wherever those projects might be, that's where we go. We have, I think now 16 different regional centers that allow us to operate in 22 different states. We have projects all across the country. And what we should always be doing as a company is trying to pick what we think is the best risk mitigated project that we think will give the investor success in getting the green card and getting their money back, wherever that project might be. And that disconnection from where the project is and where the investor may want to live, I think is one of the best things about this program. They don't have to be concerned with locating in that very specific region or trying to make sure there's something there. I think many times we've seen people pick bad projects just because it's in a part of the country that they're familiar with. Right now, we're focusing very heavily on logistics buildings. And these are huge fulfillment centers for companies like Amazon.com. Right now, we have a project under construction in Detroit, Michigan. Detroit is in the north. It gets cold. The winters there are brutal. Although it's a great location for this particular project, it's not exactly where a lot of investors, especially from Latin America, South America, might think about living once they immigrate to the United States. The connections to places like Central Florida and South Florida are undeniable. This program gives them the ability to pick a project that is fantastic, that will get them their green card, that will get them their money back, but go live in the places where they see themselves living out their American dream.
Right. Sebastian, you have any thoughts about it?
No, I mean, obviously, couldn't agree more. You know, our current project is a large manufacturing facility. It's located on the beautiful banks of the Mississippi River, but it's in a very poor area of northeast Arkansas. Really not an area where a lot of people live, and certainly not an area where a lot of investors would choose to move to. Again, the beauty of the regional center program is while we are always happy to host investors to come and see the project, you know, as often as they want, there is absolutely no requirement to do so. So relying on your partner, the regional center, in overseeing the project, making sure everything is happening, jobs are being created. And in the case of the Big River Steel project, all the jobs have already been created and the project is already complete. But again, those are the benefits of the regional center program, and you can then, you know, focus on choosing where you would like to live. Fernando earlier mentioned the types of investors we see. We have a lot of investors from Latin America, and schooling does tend to be the #1 factor, whether the whole family comes or they're just looking for a way to send their older children to high school or college in the States. I came to the US as like one of those children. I was sent to the States by myself at 17 as an F1 student. Now, when I did it, it was actually not that difficult to get an F1 visa and not that difficult to get into a good university. Today, it's become a lot more difficult, and relying on the F1 process is a very difficult process. And of course, you also have no access to things like scholarships, financial aid. You know, your ability to get jobs and internships is very hampered. So if you come with a green card, it's a total game changer. I was able to secure my green card about halfway through college, and it was a massive game changer for me. So I think a lot of the investors that we see from Latin America are realizing this and see this as really the last good way for a smooth transition.
Yeah, thank you, Sebastian. And I just wanted to reinforce those comments that I suggest investors look at their options and figure out what the safest investment is. It's like investing in anything. You're not picking a stock or you're not picking an investment because of where it's located. And there are projects in Florida that have some very good aspects to them, and they should be evaluated. But there's also projects that are taking advantage of the fact that it's easier for investors from Latin America, I think, to make the decision to have somebody go look at a building. And yes, it looks pretty. And yes, it's being built, but it may not be structured the way that protects you as much as you could be. The next slide. Oh, by the way, if you could go back one more, I just wanted to make a point about the last US finders, there's a rule, and I think this is pertinent to this conversation. The SEC has recently put forward a new rule. You're allowed to, as a non-US person, so what they call foreign finder, you're allowed to make introductions and earn fees if you introduce somebody to an investment. There is this possibility, and the SEC is asking for comment period right now as to whether or not it's reasonable for a US person to be able to earn a fee if they introduce an investor to a project. So it's not the law yet. I do expect that once the comment period is over, I do believe it will be adopted. It will require that people do not provide any due diligence to the investor. They do not advise on investments, but you can make an introduction. So I think this may play in South Florida very well for people who have access to high net worth people who are looking for an EB5 solution. Thanks, Mackenzie. Next slide. So due diligence. When we look at due diligence on a project, we're looking at two things. We're looking at the likelihood that the immigration benefits are going to be received by the investor. And we're also looking at the financial aspects. Is this deal protecting investors? Does the business plan make sense? So let's take a look at the immigration aspects first. Alvin, when we look at Form I-526, do you see anything there? Well, let me start by saying, with all the panelists today, you've got professionals, and if you work with an immigration attorney that knows EB5 well, and you work with a solid regional center, you have a high degree of getting approved for your I-526, exceptionally high. And the reason is because so long as you file properly and you check all the boxes and you make sure that you're doing things appropriately, you're not going to have much trouble typically with a Form I-526 filing. Matt, you agree with me?
I completely agree with you. We have a long history of submitting and receiving approvals on 526 and I-829 petitions. And look, you do it over and over again. The USCIS is going to ask you questions along the way. You improve your petitions along the way. And I think with every petition that we file, we increase the likelihood that we don't get any questions from USCIS and that they're going to adjudicate and approve those petitions without a problem.
Right.
I think right now we're about 5,000 I-526 petition approvals, about 1,800 I-829 petition approvals in our history, and we've never had a project denial, and that's something we take a lot of pride in.
Yeah, it's, if you know what you're doing, this is the safest aspect of it. But Alvin, let's talk about something where it has a little bit more risk, and that is Form I-829. This is where you now have to prove that the investment that you have made actually satisfied the requirements of the program. Can you talk a little bit about that, Alvin, and how does your group structure its deals so that you reduce the risk of an I-829 denial?
Sure. So like you alluded to earlier, if you structure the project from the beginning right, things will go smoothly. At the point where the investor needs to file their I-829 is they need to get information on their 829 petition to the USCIS to prove everything, that they've achieved all their goals, they've hit all the hurdles so that they're eligible to have their 829 approved, which is to remove their condition on their conditional green card. And so what we have done is we have employed a third-party fund administrator within our project to help oversee everything. Number one, to oversee the financial aspect so that they track where all the investors' funds are from the moment they have invested, so that there's a clear paper trail so that they can submit it to USCIS with their I-829. All of that also goes in conjunction with the job creation. We also have to prove at 829 stage that jobs were created. So they work hand in hand with us to monitor the job creation, the construction progress. And what they do is they ensure the investors know how the project is progressing, and they can have annual checks to see where their jobs numbers are and how quickly they can file their 829 when their time comes, when the 829 filing window opens, which is about 1 year and 9 months into their 2-year conditional residency period.
Right. So just to be fair, fund administration is very good at preventing fraud because you always know where your money is. Somebody is keeping track and keeping control of that money. So that's a very good control. But Fernando, when it comes to job creation, what's your company's strategy? How do you get investors comfortable that they can be certain that the jobs will be created?
Yeah, we work with large-scale real estate development projects and with very respected and long-standing companies in the market. So we are not a developer ourselves. We are a regional center that we vet the projects that we bring to our investors very well, and we make sure that not only the project is the construction itself is an interesting project that is solid, but also that there are other sources of funds that are participating in the financing, so that we are a small share of a big pool of other investors that are making this project move forward. So we have to make sure that the project is fully funded. So that's very important for the construction to not stop and for the jobs to keep being generated. And we also have often we have a third party doing an audit. So our investors receive reports every quarter and every year with feedback from a third party auditing company that is very important for them to know and feel and rest assured that their project is flowing very well, that they have all the information they need. And we have an investors relation team that works directly with the investors to field any questions and to help them with any last minute arrangements for moving to the US. So we have a lending and investor lending process as well, where they can use our services to make it smooth for them. So we try to make it easier for the investors in all instances. And I think choosing a lawyer that has experience in EB5 is very, very important. So we make sure that our investors know very well about our project. We provide all the documentation needed. We provide access to our senior management for them to talk to them. We can take them on a tour of the construction. They can have all that, but we also make sure that the investor, that the lawyer that is assessing our investor is an EB5 experienced lawyer, just to make sure that there are no problems for the investor and no problems for the process in the future.
That's a good point, Fernando. And I'll just reiterate that hiring a good immigration lawyer that has a lot of experience in EB5, I think all the panelists today they're probably recognizing the importance of getting everyone who invests in their project approved, and they're going to evaluate your attorney. If you bring an attorney that they're not comfortable with, they may ask you to get somebody else. Now, I never advise, in fact, I dissuade people from hiring an attorney that's recommended to them by a project, because you don't want an attorney who has divided alliances, right? You want someone who's going to represent your interests first and last. But you do need to hear from a regional center that, this attorney doesn't have a lot of experience, and we'd like to see that attorney possibly co-counsel with someone who does have a lot of experience. So thanks, Fernando, for that point. Mackenzie, I think we're on our last slide next. So the financial due diligence. So when we do financial due diligence, we break it down into 6 categories. The first 3 are talking about the structure of the business model. So we're looking at the plan, we're looking at projections, we want to look at comparisons. What are the market feasibility studies saying? How does it compare to projects that are of similar nature? How have they succeeded? We're looking at the management. We want to do background checks on the management, make sure there's no conflicts of interest. And we want to look after it, as Alvin said, we're looking for fiduciaries. Who's going to look after your money and protect it while it's invested? And then the third aspect is we're looking at financing. Is the financing in place? So if they don't raise all their EB5 capital, if all the investors are hoping to get don't show up, will this project be able to continue? Because if you're an investor and if you're one of the early investors, but they don't raise enough money and that's going to jeopardize that project, that's a dangerous scenario. So financing in place is very important. So that's the beginnings of it. Matt, you guys have probably created more projects than anyone in the industry. Structuring a deal must be something that you have a great deal of comfort with.
Yeah, I think today we're now over 75 EB5 partnerships throughout our history. And, our structure at its core has remained the same this entire time. We're a loan model. We were the first to use that model. Kurt, you talked earlier, most regional centers, they pool investors. We pool investors into a new commercial enterprise, that's an LLC, that ends up serving as a lender. And we find a project, that project serves as the borrower. And our role is to be, as the general partner, is to be a fiduciary for that partnership. We structure a loan, we enforce the terms and conditions of that loan. And so it's imperative that we work with great borrowers, that we work with great developers. I think our current project is with a company called Hillwood Development. We've done over 32 EB5 partnerships with Hillwood. They're a fantastic borrower. They have multiple projects, in fact, 6 partnerships that have already gone full circle with 829s and loan repayment. They're a fantastic team to work with. And that's at its core what it starts with. It's kind of building from the very beginning a model that'll work, a model that'll allow the project to be successful, that will properly identify who's going to be protecting the investor, who's going to be looking out for their best interests throughout that process, and making sure that the project gets built, jobs get created, and money can get repaid.
Right. Obviously, your group has been very prescient in recognizing the value of partnering with some of these major brands that are building distribution centers. And certainly that model makes a lot of sense. If we move on to progress really is very valuable, because the more progress a project makes, the less risk you're going to see, so long as the project is positive. And Sebastian, I would say that you've got a project that has made substantial progress to date.
Yeah, that's right. We do things a little bit differently. We prefer to work with something called bridge equity. So in identifying strong projects that have strong developers with deep pockets who are willing to put up additional capital up front, and thereby fully financing the project before we even start the EB5 process. And so we believe that's a huge advantage for EB5 investors, because effectively, as I mentioned earlier, the current project is called Big River Steel. It's the world's most advanced high-grade specialty steel plant. We're working on the second phase, which is doubling the capacity of this plant, which is already a massively profitable plant doing over $100 million a month in revenue. The owners of this plant had the wherewithal and the willingness to put up an additional $100 million for the second phase expansion above and beyond their own equity. And it is that bridge that we are raising EB5 to replace. But the big advantage, as relates to your question on progress, the bigger advantage for the EB5 investor is that in this case, the second phase started in the summer of 19. And because they were fully financed on day one, they were able to immediately start construction, immediately start job creation. So by the time most of our investors are investing, not only is the project fully financed, but all the jobs that are needed have already been created and verified. So to your earlier discussion on the 829, when you file your 829, you're going to be filing a verification letter that has to be put together by an independent economist. Well, in our case, that's already happened. So that verification letter already exists today, even though most investors will not even have made their first investment. So right. That gives a bit of an advantage. Now, moreover, the project actually just finished build out. So it's now also completed, and they're now optimizing the lines and will be, by the end of Q1, fully operational. So again, bridge equity is something that I think most EB5 projects would love to use, to the extent that the capital was there, the developer had it and was willing to put it up. And again, it just goes back to this notion of safety. Removing as many of the risks that you can along the way will create a smoother and more comfortable process for
right. Thanks, Sebastian. Mackenzie, I see you on the. Are you ready to take over, or can I get through the next 2 points?
Yeah, quickly. I don't mean to cut off such a great
Real
discussion,
quickly.
but
okay. So these are 2 important points. So repayment plan. How has the project designed you to get repaid? Is it because they're making enough money to use that money to repay you? Is it because they plan to get a new loan to make a repayment? Or are they potentially going to sell the asset and repay people. So you want to know what the repayment plan is. And lastly, in case of failure, what are your rights and remedies? What collateral has been pledged? What entities are between you and the assets? Because the last thing you want to do is the business is struggling or failing. You've got the collateral, but the structure of the deal was such that it's difficult to get to the collateral. You'd have to sue through maybe more than one entity to actually get there. And that's probably going to cost you more than you'll get back anyway. So you want to know what your rights and remedies are. And I think that's the end of the due diligence slide, Mackenzie.
Well, sorry to rush you through the end of it there, but I think it was a great conversation. So thank you, Kurt, for taking us through it, and thank you for all of our panelists on this discussion. I did note a couple of more immigration related questions coming through on the chat, but I think we'll save those for the next panel, as we have a couple of immigration attorneys participating. So thank you again to all of our panelists here. We're going to transition now into the next panel, but for all of our listeners, the information, the marketing information, as well as additional contact information, websites of all of our participants will be made available after the conclusion of the event as well. So you'll be able to get in touch with everyone you've heard from here today. So with that, I do want to transition over to our next panel. As noted, it's going to focus a little bit more on the immigration process. I see a couple of questions relating to alternative options above and beyond EB5, so we'll cover that as well. And then we'll take a bit of a deeper dive into some of the specific considerations for investors from Brazil and elsewhere in Latin America. So moderating our next discussion is Rogelio Carrasquillo, who's the managing shareholder of Carrasquillo Law Group. Rogelio, I believe you were able to make it on.
I was able to get on, Mackenzie. Yes, how are you?
Good, I'm good. Good afternoon. So welcome, and I think it would be great if we can go around the horn and have everyone introduce themselves for our next panel.
That will be great. Mackenzie, thank you very much. And I think thank you everybody who's joining us today for this great panel. Actually, we had just a very interesting one. And I'm delighted today to actually be joined by a great group of panelists with a lot of experience and actually that have been able to work in the Latin American area. And I understand, I'm gonna go through them. I would love you if you guys can introduce yourselves, but I have Andrea Davis, Investor Relations Manager for EB5 Capital, Emilio Guzman, Executive VP for Houston EB5 and Chief of Investor Relations. We have Emilio Miguel, who's the Regional Head of the Americas and Private Client Services for JTC Group from MES. Brent Raymond, who's the General Manager for Green Mountains Regional Center. Dan Weickland, who's actually Executive VP for First Pathway Partners. And what I would like to do, I mean, if you guys can spend, a minute or two just telling us about your practice. And what we would like to do for this conference is to be able to make it a conversation. I think we have selected a few topics that we would like to discuss about Latin America, about some of the issues that affect the region, and be able to have a conversation and share experiences, I mean, from this great panel that we are joined today. But Andrea, if you can tell us a little bit, introduce yourself briefly, and I think we can go through the rest of the group.
Wonderful. Thank you, Roy, for moderating this panel, and Mackenzie, obviously, for the invitation. I am glad to be here with everybody here today. My name is Andrea Davis. I'm originally from Colombia. I manage the Latin American region for EB5 Capital. As you may know, EB5 Capital, it was one of the first regional centers in the industry. We were founded in 2008. Today, we have raised over $800 million in EB5 financing and helped over 1,500 families. With our projects, we mostly focused on multifamily and hotel developments in primary cities. And we have a very strong project due diligence aspect. We're an independent regional center. And as such, we're proud to say that, you know, in our track record, we have never had a failed project and 100% approval in terms of I-5 to 6s, 8 to 9s, and project approval. So that's something that I'm very proud to share with everybody today.
Roy, it looks like you muted yourself,
Sorry,
perhaps.
sorry about that. No, I said, Andrea, thank you very much. I mean, for sharing that with us. And I was referring if Emilio, can you share a little more, a little about your role in Houston EB5 and your role with Latin America?
Yes, thank you, Roy. Glad to be here. I'm Emilio Guzman, Executive VP and Chief Investor Relations for Houston EB5. We've been in business as a regional center since 2010. We are also real estate developers. We do luxury high rises in the state of Texas, but we also have other types of business that we own and that we use our regional center to invite foreigners to participate in the EB5 program. Currently, we are developing distribution centers throughout the United States in many states very successfully, and we are one of the, I think, biggest regional centers for Latin America. Our main markets are Mexico, Brazil, and other countries in Latin America. So I'm glad to participate in this panel, and hopefully I can answer any questions you guys might have.
Thank you very much, Emilio. Greatly appreciated. And we actually have the pleasure of having not only one, but two Emilios in our panel today. We also have Emilio Miguel from JTC. So Emilio, if you could please introduce yourself.
Yeah, thank you, Roy, and hello, everyone. Nice meeting you. I'm Emilio Miguel, Regional Head Americas for Private Client Service at JTC. JTC is a listed trust company listed in the London Stock Exchange. And what I do, we're divided into business lines, private wealth and corporate. I would be the nexus between the private wealth that I head in the region and the business that NESF does in the US, providing fund management for EB5, E2, 1031, and opportunity zone funds. We have over 1,000 staff, almost 140 billion under administration. We don't do investments, we do fiduciary and fund administration, 24 offices. And while I'm not an expert on EB5, I cannot pretend to be an expert on EB5 by any chance, but what we do is we serve a lot of wealthy families in Latin America, especially in Mexico, Brazil, Argentina, and Central America, Dominican Republic. And we see a lot of needs for investment into the US. And I would say EB5 and the way is a getaway for wealthy families that either want to have an investment or want to live in the US. So I think I can bring to the table more on the needs of the wealthy families in Latin America, why they use and how they use EB5 to move or invest in the US.
Excellent. No, thank you very much, Emilio. Great, appreciate it. And one of the things that I would like to point out is that during the panel, we'll not only be talking about EB5, but we'll also talk about other options to investors and potential immigrants from E2 visas, H1Bs, L1s, and other areas. So we'll have the opportunity to actually talk about the region and the realities and needs of it. But next, I would like to introduce Brent Raymond, from Green Mountain Regional Center. Brent, if you could please introduce yourself.
Thank you very much. I'd like to also thank Diego from the WTC Sao Paulo and IIUSA for organizing and having this set up for us to be able to discuss EB5 and some other visa options. Again, my name is Brent Raymond. I've been involved in the EB5 industry with regional centers for over 10 years. And before that, had over 10 years experience in banking and financing. The Green Mountains Regional Center is headquartered out of Connecticut. And we currently have a project in the rural Northeast that qualifies under the rural TEA designation. The former panel mentioned a little bit about rural and the benefits of that under the new policies as of 2019. The project that we have currently, the phase one of this project, which did not utilize EB5 funds, was very successful luxury real estate development. And phase two builds out these luxury homes, additional luxury homes. Thus far, we've begun construction on the first units, and 5 of the 6 units that are under construction are already under contract. So we have a very successful project that has a history of success and the construction phase that is going on now for the EB5 project is also showing great promise. In addition, I just want to thank IIUSA again for everything they're doing for the EB5 industry, whether it be education to industry professionals or people out there that are looking for investments. I've been involved in the Best Practices Committee for a number of years and value what IIUSA brings to the EB5 industry. So thank you.
Thank you very much, Brent. We really appreciate it. And I think, and last but not least, we have Dan Wickland from First Pathway Partners, Executive Vice President there. Dan, if you could please introduce yourself. Thank you.
Appreciate it. Yeah, Dan Wickland, First Pathway Partners. First Pathway Partners is a regional center headquartered in Milwaukee, Wisconsin, but we've done projects in various parts of the United States. We've been in EB5 since 2008. And by happenstance, our first investor actually happened to be out of Latin America. I would call that dumb luck at the time. But, you know, since then, we've had some great experience in Latin America, and we have offices in the region. So it's been a great experience, and I'm really excited to be on the panel today to share some of my experience.
And perfect. Thank you very much. We greatly appreciate it. And I'm Roy Carrasquillo. As Mackenzie mentioned, I'm the managing shareholder of Carrasquillo Law Group. We're based in New York. We are a boutique law firm specializing in the areas of corporate, transactional, as well as immigration matters, assisting investors, high net worth individuals throughout Latin America, Asia, and Europe. We've done investments into the United States as well as investments within the region. And also, I mean, echoing, I mean, the words from Brent, we want to thank IIUSA for the opportunity to be able to focus on such an important market and an important area as is Latin America, as we see that we see a tremendous growth, as we see a waning of the Chinese markets and other areas. We've seen a great growth in the Latin American market, with the understanding, and I think that's something very important to mention, that Latin America really, it's not one single area. I think we're really talking about very different cultures, very different idiosyncrasies of people, and it's a very interesting and an important market, especially now as we move and evolve in the areas such as EB5. So thank you, IIUSA, for letting us be here, and thank you for all the panelists for really being able to actually give your time and join us in this process. And I particularly would like to thank my two kids, Rogelio and Alessandra, who are actually trying to learn about EB5 and all these matters where they're actually being homeschooled outside this week. But I think let's see. I mean, one of the main areas that we tried when we're talking about this is what's on the horizon, what's out there really for EB5. What were we seeing as we had very good insight earlier, I mean, about reauthorization. So what could we expect right now that we're going to be seeing in Congress? What, particularly when we're referring with investors and we have all these changes, and I don't know, maybe, I mean, if one of you would like to stab of this, but what should we be expecting from what we're seeing in Congress, particularly as it has an effect in Latin America? And I will say, I mean, I don't know, I mean, if Brent, you want to try, I mean, an initial
Sure.
How about it?
Sure. So Senators Grassley and Senator Leahy for the last several years have been taking the initiative in what is commonly called integrity measures. This legislation is primarily meant to create further integrity in the industry. I think with EB5, everybody hears the bad stories, but if you look at the previous panel and the panelists here, these all represent many projects, billions of dollars, and many green cards that immigrants have been able to be able to have approved, their conditions removed, and successfully immigrated and received their green cards. But this legislation really puts a high onus on regional centers to not only perform due diligence on anybody that they partner with, whether it be a developer or any party, whether it be a foreign agent or anybody in the United States, a broker dealer, et cetera. It creates a multitude of investor protections to provide better security to investors in a industry that requires that their investment be at risk. So I'll leave it there, and I could discuss a multitude of various measures, that, but I'll let other people comment about that.
That will be great. Dan, well, how will you comment on that, maybe?
Well, I think this bill is very important, and I know Brent did a lot of thanks to IIUSA for this panel, but IIUSA has always worked very hard on helping with these bills and getting things pushed through. And one thing they really focused on was with Grassley-Leahy was building on the bills of the past that have been proposed and putting investor protection in. So that's really important, and I think in general that's going to be beneficial for the EB5 industry. I think also some surety is going to be helpful with the deadline coming up of June 30th. You pile on the increase of the investment amount in November of 2019 to 900K. Then you have COVID. Now you have the program potentially, as it has many times before, potentially expiring June 30th. You've got a lot of investors sitting on the sidelines, and you can see that in the numbers, especially in Latin America. So I think that this reauthorization is very important to send a positive message to investors that are confused about the US's immigration process in general, that there is a positive direction, and I think this is helping us head that way.
Definitely, no, I actually agree. I think that one of the problems we've been having with the EB5 program, particularly, and it's perceived differently, I think, from Latin American investors, is that uncertainty. And I believe that to the extent that we're able to pass that permanent authorization, I think will bring a stability to our to this market that, I mean, we don't have right now. And going through that line, I think we're seeing changes in DHS. We have a new administration. We have a different immigration policies coming in. And how can we see, for example, those changes? We have Alejandro Mayorkas, who's actually previously, I mean, head of USCIS. We have all this reform that's coming. How do we see these new regulations, these new changes having an effect on the investors, but particularly how will they affect potentially Latin American investors? And maybe Andrea, I mean, and you're on the ground. I believe you're based, you're in Mexico. How do you see that there? I mean, on the ground when you're seeing what's going on here in the mainland.
Roy, that's a very interesting question, because that same question I think asked last year would have had a different answer. And I think the tone has changed from the political milieu that has affected it, from Mayorkas to the Biden administration, to the attitude, not only that it is evoked regarding immigration, but the perception of how open the United States is. So I think, we regard this as very, I would say I'm very optimistic about the EB5 industry, because we have this new legislation coming through that will allow us to create a long-term plan for families, right? A long-term reauthorization. It would allow families to come in and for us as regional centers to help provide the economic impact, prove to Congress the economic impact that it has, and have, at the end of the day, help the EB5 industry improve the reputation that you touched upon before, and the reason why the integrity bill is being created. So I think overall I'm positive. I think the Alejandro Mayorkas, having a Latin American background, will be very positive for the region in terms of EB5 and in terms of our more comprehensive immigration reform. So in overall, I think it's going to be positive on many elements.
I happen to agree. I think that the type of changes that we expect to see hopefully will be very beneficial. I think will be a matter of timing, in my opinion. And I believe that understanding how the Latin American investors in general are different, and I think that's where I would like to probably go now, that we'll probably be able to see a good effect of these laws giving more confidence to Latin American investors and allowing them to be more involved and take more advantage of not only EB5, but I think the other programs, because as I believe all forms of immigration will be affected by the different policies and new guidelines established by the government. But thinking about this, and I think going to the next topic, the Latin American market, I think, has sometimes in the United States been sort of thrown into one common, exact same market. And I think that even though we all, I mean, being originally, I'm originally from Puerto Rico, for example, we all share a common heritage and common things. We're all very different, and we have very different customs, way we work, and we see that significantly with the different investors as well, not only with respect to the different business realities of each country, but also in the way they manage and approach EB5. Very different from traditional investors potentially in China and other places in Asia, who will tend to be a little less involved. And talking about this, and I think that, and Emilio, to Emilio Miguel, I mean, you mentioned, I mean, you're being involved, for example, Emilio, in Latin America throughout years, not only in EB5, but throughout the region. How will you talk about this? And this is something that I would like to ask the different panelists. Talk about these nuances. Let's talk about these differences and how you see the different groups and areas in the Latin America versus, I mean, what we're traditionally used with the Asian markets in something like EB5.
Yeah, okay. Yeah, I would say starting from a general concept, I would say that in Latin America, wealthy families go through the same or very similar steps. They accumulate assets in their home country, then they start investing outside, and then they start planning on those investments. Then they think about buying a property, and eventually, depending on the conditions, they think about moving to the US. And one thing that has in common that almost all Latin American countries is that they look up to the US. It's a natural place to do business. It's a place where the kids go to school. It's a place where they want to, it's the first go-to place if they have to leave their home country. So that's a general, I would say, a general rule that applies to almost all Latin America. Of course, countries are different. I have some numbers. I don't want to bore you with numbers, but for example, Brazil has way more ultra high and net worth individuals than Mexico and Chile and Colombia and Peru and Argentina by far. So I would say if we had to do a ranking of the number of wealthy people that has the possibility of starting an investment abroad, Brazil is by far the most populous one. And then Mexico, then Chile, Colombia, Peru, and Argentina in that order. Okay. Now, there is a political situation in Latin America where many countries have left-oriented governments, and this means nervous, wealthy people that is looking more and more for investments abroad. If you look at Mexico, Ecuador, Venezuela, by far the most radical one, Chile and Argentina are all with left-oriented governments that bring, you were talking about instability in the US. Well, that's a matter of perspective, because for any Latin American investor or wealthy family, they will buy the American instability hands down any day, because their instability
any day of the week
and insecurity in their countries is way, way bigger. So all those countries with left-oriented and populist or socialist government, plus the possibility in Brazil that Lula, which is an extreme leftist, comes back. There was a Supreme Court ruling last week that would allow Lula to run for president again, has plus what you were mentioning before, the real going from 3.8 to 5.7 in a couple of years. That is making a very fertile environment for investment opportunities in the US, and EB5 is one of those, for sure.
Excellent. No, Emilio, I happen to agree. I think that one of the big problems that we have, I mean, throughout Latin America, it's issues with maybe economic instability, maybe political instability, like you mentioned, maybe movements to the left, but they're all different, and they have to understand that as we see it from a US perspective, everything is different. Something, and I'm referring to Emilio Guzman, I mean, Emilio, you mentioned you've done a lot of work in Brazil and Mexico, dealing with a lot of investors for Houston EB5. Adding on what Emilio was mentioning, for example, how do you see those considerations that they're doing? I mean, for example, between a Brazilian investor or a Mexican investor when you're comparing it, and just to get a little color and flavor of what are the differences and nuances when dealing with Latin American investors.
Yeah, well, for us, Mexican nationals have always invested in 3 or 4 main states, right? I mean, they like California, they like Texas, they like Florida, they like New York. Whereas what we've seen, the Brazilian investor, loves to invest in Florida. That to me is a big difference because, Mexican nationals, especially, are investors, like to do and get involved as you mentioned in the project, do their own due diligence, but they understand how these 3-4 states work. I mean, they're not on the decision on living in one state and investing on that same state, but they can move around very easily. Whether as Brazilians, what we've noticed is less the intent to invest any other state that is Florida. So that to me, it's a very important difference. These are wealthy individuals. They do their due diligence, but they also like that we know and understand their culture. We understand that where they're coming from, how they want to see things, how they want to be guided through the whole process. So to us, being a more boutique service to all these clients is very, very, very important.
Excellent, Emilio, and I think you hit on something that's very important. Just from the way business is generally done in Latin America, there's a lot of face-to-face, and I think that it's important when you're dealing with your client and that to have that personal contact, to be able to actually feel comfortable with who you're working with. It's normally you know that they can do the work, but be able to know who they are and know them on a more personal basis. I believe that, it's something that I've seen throughout my 20 plus years of practice, that it's an essential element of doing business throughout the Latin American region.
Yeah.
And Andrea, I mean, you see it, you're also locally, and that's something that you're seeing every day. How do you see that impacting for example, your practice?
No, I think that's, it's absolutely right in terms of what both Miguel and Emilio Guzman say. But, going back to your original question in terms of the nuances between Latin America and Asia, I think a lot of the difference has to do as well of how the wealth was created, right? A lot of the EB5 market is based on Chinese wealth, and Chinese wealth was something that happened within one generation. In the 1990s, China opened its doors, and tremendous wealth was created within one generation. Not then, fuel the EB5 industry, and therefore, I see a very big difference in terms of the Latin American investors, that the type of wealth that they're bringing to EB5 is a generational wealth. It's something that, it's very family oriented. It tends to be a family decision. It tends to be tied to multiple, aspects of their lives. So I see that nuance in the trust as well, right? I think the Asia market is heavily agent heavy market, and sometimes the regional centers don't even have contact with the investors. I think in Latin America, the investors want to trust you first, and they want to get to know you first. And after that investment conversation will start. So I think there are many elements that are very different when it comes in comparison to the EB5 investor. And also, I think, we shouldn't speak to Latin America as an entire region, but one thing that is sort of a common thread is the little institutionality that we have across countries. So in a Latin American investor will like to know who you're being recommended by, who's your advisor, who's that sort of network surrounding you, and based on that, they will make a decision because they're used to, the system not really working. Hence, that's why they're looking at the United States to either invest or send their kids to school or have their second home.
Excellent. No, very true. And now that we're mentioning it, we're talking about how different countries really comprise this region. In addition, we've mentioned Mexico, we've mentioned Colombia at one point, we mentioned Brazil. I don't know, Brent, for example, what are you seeing, or again, what are you seeing actually in those regions to be the main motivations for coming into this? When you're talking to an investor, what is their main motivation? And it differs by region, but what has been your experience?
So again, it's dangerous to group Latin America as a whole, but some countries in Latin America, as we all know, are experiencing some political upheaval and or economic upheaval. So I commonly see investors that are interested in the EB-5 program to assist with moving to the United States, being able to use this as a catalyst to be very entrepreneurial, typically, to start business in the United States, or even to expand on their businesses in their home country. I think it was mentioned earlier, or if it hasn't been, we'll be discussing, specifically the volatility of the Brazilian currency. That has had an effect historically in some different countries in Latin America. And then a very, very common theme is interest in their children receiving a quality education at a university in the United States, and not having to worry about, after receiving that education, about whether or not they might possibly be able to stay on and work in the United States. So that is a very common theme in Latin America, especially because from what I've witnessed from a multitude of investors that I've worked with throughout the region, they're very, very family-centric and concerned about their children's livelihood and future. And the EB-5 program provides a great opportunity for their children to be able to take advantage of further benefits of, if you do have a green card, of being able to utilize student loans and other benefits that are provided to United States citizens. That was mentioned on the previous panel, I believe.
Definitely no. And something that we're seeing, and I would like to remark that I'm going into then the next topic about project due diligence and these matters, is we're seeing that a lot of the investors who are coming from Latin America go that more just for one investment. Saying that they're not only doing necessarily an EB-5 investment, but they're really looking to grow their business. They're moving their family. They're really expanding and growing, and we see more of a bigger plan and more planning from a tax perspective, from a corporate perspective in their investments in the U.S. How you're seeing, and I think from there we'll probably jump into our next topic about how to look for the right project, right investment. But Emilio, I don't know if you were interested in jumping on that.
Yeah, before we move to the other, where you were talking about differences and
sure,
in countries within Latin America, I can throw some numbers to try to picture how.
Perfect. That would be very helpful.
Yeah, how historically and culturally there are differences. For example, Chile, since 2014 and in 5 years, 2014 to 2019, the amount of assets held offshore declined. So it went from 14.5 billion in 2014 to 11.3 billion in 2019. The other side of the coin is Brazil. It went from 13.3 billion in 2014 to 22.8 billion in 2019. Argentina also almost tripled the amount of assets held offshore. Mexico is quite stable too. Typically, Mexico and Chile business families tend to invest a lot and reinvest a lot in their businesses, and also have as a side investment the offshores, but they concentrate the majority of their efforts in their local investments. And then those are differences that you see now. This data I have is up to 2019. The political situation in the whole region is going to affect this, and we're seeing more and more flow of funds out of Chile and out of Mexico due to political situations. So again, it's going to be, and those assets offshore are looking for opportunities, and that means that they will be looking at EB-5 projects, opportunity zone projects, E2 visas to start processes, investment processes in the US. So there's going to be a lot of opportunities in the coming years. This capital is looking for opportunities in the US.
Correct. No, and like I mentioned, I think that you hit the nail right on the head, which is not only on the EB5 side, but they will be looking for capital to invest, grow their capital, and really develop their businesses here. So I think that there'll be opportunities for them to invest in different areas, not limited to only EB5 immediately or there. So I think that that would be very interesting. But now that we're looking at, for example, the projects, and we're understanding a little better, I mean, the Latin America is more of a crispy salad, right, and a melting pot. So I mean, it's just different nuances, different peoples, different needs, and understanding. I mean, how those realities are really affecting the investors coming in, the changes in the U.S. There's like, what are the opportunities that they can see when they're looking for a project? And my experience dealing with a lot of high net worth and ultra high net worth individuals is the due diligence process seems to be a lot more intense, I mean, and more involved. I mean, these are people who are very generally business savvy. They probably run similar businesses in their home country. They want to be involved, and you see a lot more involvement in their process. How it's, for example, and maybe Dan, you can start a conversation, how you're seeing that initial due diligence as investors are coming in when they're looking into a project, and how that may differ from what we're normally used to in other investors, particularly in the EB5 space.
Yeah, it's been mentioned several times, and I know it was in the last panel, that Latin American investors are much more interested in location of the project than a lot of other countries we deal with. That being said, the due diligence is important across the board. It's not just about location. You know, when you're pairing an investment with an immigration benefit, you have to do due diligence on your partners as well. And, you know, I think that IIUSA has been a good resource for that for people. We direct a lot of people to IIUSA to get information about what's going on in the industry, who the players are. And it's been advantageous for us to have gone full cycle with investors, you know, bringing them all the way, including Latin American investors, to the refund of their capital. And a lot of people have done that now. And I think that's advantageous as well for people to understand, people that understand the process. But then it goes down to the project too. You know, what are you investing in? How is it structured? These can be very, very complicated deals. You know, years ago, most EB5 was structured as in a first position on projects. That's not typical these days. So investors have to be really diligent about what they're looking at. And that's paired with, there's people out there that can help them perform that due diligence. It's partnering with proper regional centers that have done the due diligence for them. And also on the immigration side, having a great immigration attorney. I know that language is really important in a lot of these countries. So partnering with someone that speaks the language, that can explain it to you so it's understandable, because when you're moving to a new country and you're investing in something, that's tough anyway. And you're coupling it with this complicated immigration benefit, you want someone that can make it as simple as possible for you.
I agree. And like you mentioned, I think it's important to have the right team, and think in the whole process, in the process of being able to do the due diligence, legal, financial, and it's a big change. I mean, it's one of the most important steps that, I mean, somebody or family could take, and I think it's very important. So right now, I mean, when you're looking, what things should an investor consider when they're looking at a project and they're evaluating it? What are the type of things that they should be looking for and evaluating? And Emilio Guzman, maybe you can help us from seeing the investors. I mean, what are your thoughts on this? And maybe I want to follow with Andrea afterwards.
Sure. I mean, of course, track record. Track record is very important. Mm-hmm. You know, history of the company, what we've done before, you know, specifically for EB5s, you know, our approval rating, which is, you know, 100%. What type of assets are we, you know, building? What type of projects are we inviting these investors to join with us? And what is our expertise in the last projects, and how successful we are with them, the reputation we have with banks, the reputation we have with the city, and overall experience. I mean, we've been in the real estate industry for more than 25 years. We are a regional center since 2010, but our real estate experience is huge. So I think that it's a big difference. I mean, they look for people that they can trust, and teams that they can deliver what they promised.
Excellent. No, thank you. Andrea, would like to add?
Yeah, I would echo what Emilio says, but I would add also obviously when I speak to investors, a lot of the due diligence that they should do is twofold, right? It should be regarding the regional center, the diversity of the regional center, the track record, the type of assets, the capital stack of the actual project, the construction timeline. Those are elements that are crucial, right, for a project, and then as well for the where the project is located, and so that those two elements are something that I emphasize investors to do as well. The repayment track record of the regional center, the type of documents they produce. Do they allow you to conduct your due diligence? Do they support you through that entire process? And at the end of the day, do they have investors that they can refer to and you can talk to? Because at the end of the day, it's a very complex decision that the investor is making, and it's sort of a financial investment with a emotional investment criteria where their family decision in future is tied to. So as much as due diligence as they conduct, that is crucial, and then obviously the best immigration attorney that they can get will minimize their risk and assure that their process is a success.
Excellent. No, I think that's very helpful. I believe.
Roy,
Yes,
I just wanted
Emilio.
I just wanted to add, we come across a lot of, especially the younger investors or the family offices that represent the second and third generation. They look a lot at sustainability and impact of investments. It's NESF, for example, invested in a software that measures the impact that each fund has, or the level of sustainability that fund has. And it's a trend that is growing, and more when we look at fund managers and investors, they have sustainability and impact as one of the key elements for choosing the right investment.
And we're seeing that you're seeing this throughout the region. I mean, the sort of the family offices are looking at projects. That seems to be one of the important aspects for them for their investment. Very interesting. And I think that goes to what I was mentioning, that we're seeing a different type of investor. It's a different type of investor looking for different things in their projects, different needs, which expands a little, I think, the way they can invest beyond just EB5, which I think is being able to access other type of visas, e-visas, if they, in the case of E-treaty countries, L1s or ones. So I would like to, what are you seeing? I mean, as we look at Latin America and we're looking at these realities, what are you seeing with the investors when they're looking beyond EB5? And I don't know if that's something you're seeing on a daily basis, or in the event of we've seen some clients, they have maybe one of the family members coming through EB5 and maybe doing other family members through other types of visas, depending on the availability. So I don't know if you want to, Andrea, if you want to talk about this, I mean, based on what you're seeing, and then hear about the other members of the panel on this issue.
Yeah, I think we're seeing, I think before, in the sort of old days of EB5, it was sort of a family unit type of investor that would, it could be, a high-level executive that would, use his or her savings or what they had compiled throughout their lifetime, and then make the second phase of their life in the United States. I think that now has completely changed. I think the type of investor is, as you mentioned, it's more sophisticated as we are seeing it, and that EB5 decision is now a decision that has a multiple facets and multiple strategies, right? It's no longer just EB5. Is it about whether the father wants to come, or is it just for the children? And then the mother and the child will do the EB5, and the dad might do another type of visa as they continue to manage the family company in Mexico. or in their local country. So I think we have seen EB5 change in terms of the strategy, right? I think also something that I've, post-COVID world, before it was, political situation, it was education, but now the question will be, where do you want to quarantine in the future? Will you want to have another country where your family can quarantine? So I think those are new elements that we're seeing in the EB5 decision-making process. And also, as the investor gets more sophisticated, you have more advisors in the mix that are part of this due diligence process and this decision-making process. So there has been a substantial change in comparison to the profile of who used to invest and who will be investing in the future.
And so tied to this, and I think, one of the questions that's come up in our chat is, how can we describe an example of an investment project? What will an investment project be? And I think that, Dan or Brent, if you can tell us, how will you describe an investment project maybe for an investor that they can understand and be familiar with?
Yeah, I think if the investors were listening to that last panel, in an investment project we're talking about here has to comply with EB5. So, if it's a regional center project at the $900,000 level, it has to be in the proper location, in a targeted employment area. It has to create the necessary jobs. So every family that invests has to create at least 10 jobs. And that's direct, indirect, and induced. I know in this slide here, the next slide, we're going to talk about direct EB5 investment a little more. But, the project itself has to comply with EB5 first. And then it's all those things that everybody was talking about in the capital stack. You want to look at a proper investment that you can be sure that it's going to return your funds. Now, the funds have to be at risk, like we say in this slide, but you want to do your due diligence to make sure your money is safe. And the project can be anything then. We learned on the last panel, people had manufacturing projects. Hotel projects have been big in EB5, multifamily depending on the size. So there's all different types of projects. It just depends on what the investor's interested in, what's going to help them reach their goals of getting that green card and then also getting their money back at the end of the day.
I think that, Dan, that's actually very true, because normally, particularly with EB5, is being associated with a construction real estate type project, but there are other options, other ways that can be accomplished, that we can see actual investments work, as long as they're structured correctly. With the right team, they will be able to work outside of the traditional real estate construction hotel type environment. Brent, would you like to talk a little more about some of these projects, or?
I think it's already been mentioned on the previous panel, and,
okay.
and as Dan mentioned a little bit here, they can be broad and varying. So if you have an individual or even a family office that has sophistication and has expertise in specific industry, and they're looking at a project that isn't necessarily in that specific area, especially an individual, they should be looking for a trusted advisor that can assist them beyond, there's a lot of amazing EB5 attorneys out there, but Roy, I think you'd agree with me that not many EB5 attorneys want to comment or provide a due diligence report on a very complicated project that might have multiple tranches of financing and various entities involved in the deal. So it's essential, no matter what type of deal, whether it's a hotel, a multifamily, commercial enterprise of any sort, or luxury homes like our project, that if you do not have that expertise to properly analyze it, that you work with an individual that can do the due diligence, and just as importantly, that you're working with a regional center and a project that is totally transparent and comfortable with a great deal of due diligence being performed on their project. If you see any sort of hesitation from a regional center entity or a project about questions being asked, then that might be something you should be concerned about. But overall, historically, typically been real estate, but there's been lots of projects out there, and I think with COVID, that provides a lot of potential projects out there that won't be in the typical real estate hotel sector, or if it's in real estate, it's not, you know, a commercial, retail, mixed use sort of project that we've seen. Another thing to look at for opportunities is the change in targeted employment area definitions. The prior panel discussed the difference between urban and rural. If you're looking for security, you might want to look at rural. It's definitely not the only reason to make a choice, but a lot of people would be able to rightfully argue that if, especially in a COVID era where unemployment rates are going to be fluctuating throughout the United States differently in different regions and different towns and cities, you want to make sure that if you're investing a $900,000 amount in an urban targeted employment area, that you don't have any concerns that at some point that $900,000 is no longer considered the required investment amount.
Correct. And that's a very important issue, because I mean, one of the effects of a lot of the changes that we had on regulations on the EB5 side was that the increase wasn't really from 500 to 900,000, but really from 500 to 1.8 million based on these changes on the TEA regulation. So it's a very important. Something else, Brent, that I think it's important that you mentioned is how the structures, the financing structures of a lot of these deals are more complex than they probably used to be 5-10 years ago when they involved EB5. And you have different sources of capital within your capital stack, where you may have tax credits, you may have bonds, you may have all these aspects coming in, and it becomes very important in that process of due diligence. But I think we can move probably to the next slide now. And I think that in general terms, we talk about the E2s, I mean, and the visas. There are other type of investor visas that, I mean, E3D countries may be able to actually, people who are part of E3D countries may benefit from. We have the H-1Bs where are out there for as part of a lottery system within the U.S. L1s, which tend to actually deal with companies are established outside of the U.S. but actually have operations within the United States, and they can transfer their employees at that time. And I think we have the direct EB5 investment, and I think that's where, I mean, the party will invest directly into a project. One of the main differences between a regional center project and an EB5 direct project is that the employees need to be direct employees of the project. So they have to be W-2 employees, and the number of employees that you can count for the job creation requirements are less, as you are not allowed on a direct investment to use indirect and induced investors. But if anybody else would like to add anything on this, because I think we're running out of time, and I would like to hear, I mean, everybody, and I know Emilio may have to actually run out, so I want to make sure that we can get a chance to have some opinions before and some final takeaways from the meeting. But if anybody has any comments on the other aspects, I think that
I have a comment that is actually
yes,
a question for the experts, because we've seen a couple of recent cases where, although the requirement is 900,000, the lawyer of the client argued I mean, based on, I think it was, I don't know if it was case law or law, that you could actually pay 200,000 and finance the rest, or issue a promissory note securitized with U.S. assets. Is that something you're familiar with?
Personally, it's something that I don't see. I think that the investment needs to be, I mean, in order to be in full compliance, you have to invest the full amount. There may be some arguments out there, I mean, where you can try to finance it. It depends if the funds are actually coming into the project, you're actually getting a loan to be able to pay it, and there are actually ways that a loan will be able to qualify. But a promissory note without any necessarily cash coming in, I will be concerned. I mean, if they were my client, that the investment may go in, but I don't think that it may be able to benefit until the full amount is in, of the immigration aspects or benefits from the project. And probably something that USCIS will probably see, that the money is really not at risk and not really invested in the project. But I've seen those type of arguments. I mean, if you can divide the payment into ways, then it's really, as a traditional capital, will have to be something different. So, but it's you have to be liquid assets and other matters that will have to be available.
Okay. And maybe let me comment on the E2 to EB5, because we've seen a lot of that recently. You know, we happen to have an EB5 product. There was a good transition from 2019 to do E2. And so we've had a large influx of E2 investors. Brazil's not an E2 treaty country, but Mexico, Colombia, there's other places around the world. And E2 to EB5 is very interesting, and we're seeing a lot of investors interested in it because it gets them more immediate access to the country while they're waiting on the processing of their EB5. But when we talk about the complications of the new TEAs on EB5, that complicates it for E2 to EB5 as well, because investors have to remember, if someone is pitching them on an E2 to EB5, they're going to have to make their E2 investment in a TEA to still qualify at that $900,000 level for EB5. So the beauty of E2 is you can pretty much invest anywhere. But if you're planning on doing EB5 down the road, again, you have to make sure you're investing in a TEA. Otherwise, you're going to have to spend double the amount down the road. So it's something for investors to remember as they're looking at some of these options.
Dan, sorry, quick question on that. If you have an E2, sorry, Roy, we're running out of time, right?
No, bro. We have time. I just want to mention that, I mean, some of our panelists have been saying that there may be ways, and again, I'm a securities attorney. This aspect, good. There may be ways that, I mean, actually a promissory note secured by liquid assets may work. I'm not familiar with the aspect. I mean, I'll leave it to the Immigration Council, but there may be ways that it may be structured. It's a matter of, I think, making sure that, I mean, everything complies with the different regulations. But sorry, Emilio, I just wanted to add that from.
No, thanks. No, on the E2 to EB5. So an E2 project, an E2 visa that has already been granted and it has been running, the business has been running for a few years, can it convert to EB5?
That'd be more of an immigration attorney question for me than for me, Emilio. I mean, typically, you know, we're structuring investments that are new across the board, so that's why they qualify. You know, I don't know, again, you have to, with EB5, again, it has to be a new commercial enterprise. So, you know, what was the intent originally? There's a lot of different pieces that go into that. So, you know, the simplest form is find an E2 business, create a new business, and as long as you can get up to that 900K in a TEA, then you can qualify for EB5 down the road as well.
Thanks.
Excellent. So I think that, as I think we're probably running out of time very soon, what I would like to probably do is, I mean, have each of the panelists, I mean, give us, I mean, what are the general takeaways? We're looking at the Latin American investor looking to evaluating an EB5 or any type of investment in the United States. What will be your main guidance, the main thing that they should be focusing on? And then maybe we start with you and we'll go down the other panelists.
I appreciate it. First of all, again, thanks, Roy, for moderating this, and all the panelists, and IIUSA for putting this together. I mean, clearly due diligence is an important thing. I think everybody's touched on it. Understanding who you're doing business with, whether it's EB5 or any other type of business, is very important. And when you're making an investment, it's even more important. So, I mean, that's a huge aspect of it. For Latin American investors, I mean, I realize, you know, I tell people my English is terrible, my Spanish is bad, and my Portuguese is non-existent. So having someone you can do business with is important to be able to understand. So, you know, we have people on the ground in Latin America that can explain this to people, because people want to understand. And that doesn't matter where you're coming from, what region of Latin America. People want someone that they can kind of look face to face and understand what they're investing in. So it's important for all investors to do that due diligence and understand, again, who they're doing business with in this process.
Excellent. Thank you very much, Dan. We appreciate it. Brent.
Yeah, I'd just like to reiterate that, you know, these are complex deals that involve both immigration and investment for job creation. And that's the intent of this program, is job creation and promoting the economy. So anybody out there who's interested in EB5, one, should ensure that they have a immigration attorney that has specific experience with EB5. And two, if they are not familiar with the industry that they're looking to invest in, that they just seek out a trusted advisor, maybe within their network, or their network can recommend somebody to them, and that advisor have an open channel along with the investor to the regional center and the project, and there's total transparency. I think as United States has come out of, I don't want to get too political here, the Trump anti-immigration period, and we're now coming out of, soon we'll be coming out of COVID as more and more people have vaccinations. It's a great opportunity for EB5. One, many economists are talking that this next phase in our economy will be like the Roaring 20s. Who knows? But I think that the United States has a history of coming back strong from economic recessions. And I think that we're going to come back strong from this recession caused by this pandemic. So there's a lot of good projects out there, and want to thank everybody for listening. And again, want to thank Diego with the WTC Sao Paulo. I really appreciate them partnering with IIUSA.
Thank you very much, Brent. And Andrea, I think what would be your takeaway from
thank you, Roy,
for our participants?
Thank you, Roy. Thank you, panelists, for everything, and IIUSA for organizing this. I think there, my final words would be, I think, I will not stress due diligence again because it's been stressed sufficiently. So I will not repeat that. But I think, that is a very important aspect to have on the project, on the regional center, and on your immigration attorney. I think those are the three pillars that an investor should do. I think from another level, they should have a idea of a family strategy, right? What is their long-term, what is their short-term goal, and what is their long-term goal? Because that will determine their investment timeline, their moving timeline, whether they do an E2, EB5 combination, and it's a case-by-case basis. So I think that would be one element to do. And then another aspect is the source of funds, right? I think it goes back to sort of the generational wealth and the documentation of the wealth, to look at all your assets and say which ones will be the best ones or easiest ones to document and carry you through the process. And I think finally, I would just say, EB5 works. If you do it right, it will work. I think there is a lot of mistrust in Latin America. I think there is misconceptions about the program, but I think overall it works. And I think, we've seen Latin Americans, we've taken them through the full cycle, we've had them repaid, we've seen their families get a green card, get citizenship. So at the end of the day, it's a good program. It has created economic impact for the US, and it has a tremendous benefit to international investors because unlike the E2, it is not dependent upon our political pendulum that defines Latin America. So I think that is a tremendous benefit that this EB5 and this type of visa has.
Perfect. Now, Andrea, thank you very much. I understand that Emilio actually had to leave. He has a client meeting, but I would like to thank, all our panelists, Andrea, Emilio, Brent, and Dan. I think you did a great job. It was great actually to work with you, but most importantly, I wanted to thank IIUSA, Mackenzie, who's been great on this, Diego from the Sao Paulo World Trade WTC. I think that thank you for your time. We are myself, as well as all the other members, were available for any questions that you may have, as well as to answer any issues. We're happy, I think, IIUSA. But again, thank you. We look forward for you to have a great day, and I defer now to Mackenzie.
Thank you, Roy. Thank you, everyone. Thank you for the great discussion. Taking us through that. Actually, Diego, I wanted to see if you wanted to have a few last words.
So just to thank you, Roy, Mackenzie, for the opportunity, and congrats for the contents here today and the moderation. And appreciate the time, your time, and the time of all the connecting Brazilians and Latin American leaders today here.
Well, thank you again for your support. We're certainly looking forward to hopefully being able to host an event in person in Sao Paulo and elsewhere in Brazil sooner rather than later. That's actually how we initially met, was we were planning to host an event last year. So looking forward to getting back to that. I appreciate all the thanks from the participants today for what IIUSA is doing, but I think really the thanks is to the participants here and the members that they represent. As I noted, IIUSA has 300 member organizations around the world, and they're how we do everything that we do. So they're directly supporting all of the efforts to ensure that the EB-5 program receives a long-term reauthorization. They're obviously supporting our educational initiatives and everything else we do on behalf of investors in the business community in the EB-5 space. So thank you again to all of our members and sponsors who contributed their expertise to today's discussion. One final note before we wrap up, we actually have another event coming up quick next week on April 6th and 7th. For those of you who are interested in learning more about the EB-5 reauthorization efforts, we have our EB-5 Leaders Advocacy Summit. That's a free event. Anyone is welcome to participate. For investors on the call, and again, we'll give you some good information on the EB-5 process, but more importantly, the work going on behind the scenes to ensure that the program has a long-term reauthorization and thus long-term security as well. So registration information for that can be found on our website. Thank you again to everyone. I hope everyone enjoyed the conversation. For anyone that missed anything, the recording will be made available tomorrow. And feel free to reach out to info@iiusa.org with any questions for us or for our participants. Thank you so much.
Thank you, Mackenzie.